Welcome traders. This is called 5 minutes time frame. I've already done back testing for the previous 11 days. So I'm going to show you the findings so that if you are interested, you can then look at the strategy. I'm going to explain everything. So this was just 11 days, of course excluding this part because price has not closed yet. So for the past 11 days, what I found are 21 entries. These are the trades. So these are the days. It was 11 days. Trades, I had 21 entries. Losses, I had 10 losses. Wins, I had 11 wins. Now the ratio was a 1 to 4. Let me just show you. Maybe on 3 of the trades, this is a 1 to 4. You can see there the ratio. This is a 1 to 4. This is a 1 to 4. So for all of them, I was sticking to a 1 to 4. And for the stop loss, okay, quite a bigger stop loss because it's 30 pips and the TP it's 120 pips. Okay, if you are able to read this thing, let me just show you. Okay, you can see that it's 28 pips stop loss, it's 23 pips stop loss. Okay, this is 31 pips stop loss. So I just took the average and made it 30 pips stop loss. Okay, and the target is 120 pips. Now if the stop loss is 30 pips and I lost 10 trades, it means I lost 300 pips. And if the TP is 120 pips and I won 11 trades, it means I got 1,320 pips profit. Profit minus loss, that is 1,020 pips. So for the past 11 days, if you were trading this simple strategy I'm going to show you, you would have made 1,000 pips profit, 1,000 pips gain. Okay, so let me just show you the strategy. Okay, another thing that I also like noting is the maximum number of losses. Let me say losses in a row. Okay, let's say you place a trade here, you place a trade, you place a trade. How many losses can you have in a row? So the maximum losses, I found it to be 4. It was just in one place. Okay, 1, 2, 3, 4. Yes, it was here. Must have been a holiday or something, but I didn't observe that. I was just placing trades right away. So I had a loss, a loss, a loss, a loss. So 1, 2, 3, 4 losses in a row. Okay, and then followed by a win. This was the same day. So let me just explain to you the strategy for those of you who are interested. Remember that I already have strategies for gold which you can look at. This is just investigation for those who like exploring. Okay, you never know who this thing might help. So this is what you do. Okay, let me just set up the indicator that I use. Okay, you go to indicators. This is trading view, free version. So I go to indicators. Okay, sessions, this one, sessions by Lux Algo. You just click once. It's going to appear like this. Let's go to the settings. Okay, I want to remove that daily divider. And then on Sydney, I want to make it black so that it's visible. And then I'm going to remove the rest. Okay, so I only have Sydney and then press OK. So what I was doing, let's remove this, is that, okay, let's remove this. On gold, on the 5 minutes time frame, when the Sydney session begins, like now, the Sydney session has already begun. It began some time ago. So I just mark the first candle of the Sydney session, just the whole candle including the wicks, and then I extend to the right. Very simple. This is even good for beginners. Okay, so what I will do now is wait. If price is going to close below in a full candle, okay, let's say price closes below here in a full candle, what I will do is place a sell trade, put my stop loss just above the key level that I have drawn, or at a maximum of 30 pips, and then I target a 1 to 4, okay, and then I target a 1 to 4, just like this. So that's it. Okay, that's what I was doing. You can see right here that on this day I just marked the first candle, price closed above, okay, and then I placed a buy. You need to be very, very sure that price has closed in that direction. You can see that right here I didn't observe it, okay. Maybe if I had another candle below the first red candle, I would have sold, okay. Even here I would have placed the buy there, but then I saw it a bit late, okay. Let's just proceed. You see here, you just mark the first candle, okay. This is the key level, and then price closes below there, you sell, you target a 1 to 4, okay. Now same thing even here. I want a place where there was a loss, okay. You can see here that after marking the first candle, price closed above, you put your stop loss just below that key level, and then it takes you out, okay. There was just a spike. Now you cannot place a trade just after a spike, okay, like that. You can only place a trade if, let's say, this is the key level, this is the first candle that has closed below, okay. Let's draw the wick. Here is the wick. It is wise to have another candle coming to close below that first candle, okay. If you have something like this, you are now very sure that price really closed below, okay. So right here I would expect to have maybe another candle coming to close below that red candle, okay. If I had another candle coming to close below that red candle, I would have sold, okay. I would have sold, but this second candle didn't close below this one. Instead it pulled up, okay, and then it closed above, and wait for another one to close above this one, which happened right there. That's why I had the buy trade there, okay. So those are the tricks that you might need. In fact, whenever you are looking at a breakout, okay, a breakout should have something like that. Breakout should have something like that. Let me show you another example, okay. Now for this example, let's say you are analyzing not using this strategy. You are analyzing maybe this downtrend. You want to know when price is going to be breaking out of this trend. So what you do, okay, remember the first thing, you need to identify the lowest part of the trend and where that lowest part began. Okay, so when a trend is moving like this, there's always this lowest part, and this lowest part started here. So for you to consider it as a breakout, price must come and close above this level like this. Then you know that right here it is a breakout. Okay, if it doesn't close above, instead it continues, now you have a new lowest point which started here, and it moves up again and it comes down again. Now you have a new lowest point which started here, and if price happens to close above that, then you know that that is a breakout. So here, when this was the lowest point, you know that it started here, because price came from there, down, up, down. So when you mark like that, you know that the breakout happened on this candle. But even on that candle, you would have to have another candle coming to close above that candle. Then you are sure that it is a breakout. Okay, then you are sure that it is a breakout. So that's the basic thing about identifying breakouts. Okay, so let's come here. Price closed below, I sold, but took me out there. Okay, and then there was a breakout on the upper side, took me out, a breakout on the lower side, and then on the third chance I finally made it. Okay, finally made it. So that's how that strategy goes. If you lose, you wait for another breakout, being guided by your key level. I will end this video here. If you are interested, you can maybe modify this strategy. Thank you for watching.